What's up, everybody? Thanks for tuning in for another episode. If you're new to this channel, my name is Michael. I'm a millennial investor, maybe just like yourself. I'm a big believer of a work-life balance and building real wealth by investing in the stock market. One of my mottos is work hard and play harder. That is, if you want to play hard, like maybe owning a supercar or popping bottles of Dom Perignon on a yacht. Maybe you just want to continuously build your investment portfolio so you could play real-life Monopoly. I personally prefer the later option. In that case, let's turn that fake money into real money. When your portfolio is big enough, the decision is ultimately yours. You may want to retire early, but the option is there because you made the right saving and investing decisions at a young age. Just so you know, I believe investing in the stock market is one of the easiest paths to financial independence. The major dilemma for me when I started investing in companies, make a note, I said companies and not stocks. Remember, there's a company behind every stock ticker that you see. At 19 years old, my major dilemma was that I didn't have a huge bankroll to start investing. I started at $0 and I built my portfolio slowly but steadily over the past 10 years. This bull run we've had has been kind, to say the least. My ultimate goal was to eventually live off of portfolio income, which includes capital appreciation on one side, as well as qualified dividends on the other, along with profits from my other business ventures, like selling real estate being one. I thought it was a cool idea to start a channel and provide my unique approach to investing in personal finance. Once again, starting at $0. To be honest, I was stuck in a consumer mindset for quite some time. I watch plenty of YouTube videos and follow many channels. Who's kidding anyone? I still do. I finally woke up at 29 and decided, screw this. I'm done consuming. I need to start producing. So at 29, I know I could pass along a lot of information about investing in the stock market that I couldn't have when I started. Did I wait too long? Probably. I've been thinking about making this channel for over 5 years now. And I finally woke up from The Matrix. Big fan of that series. Can't wait for the fourth film in 2021. As I was saying, I finally woke up. No more consuming, let's be real, less consuming, and more producing. We get one life, and I'm the character of my own movie. On here, an aspiring YouTuber. That sounds kind of funny to say. Where was I? An aspiring YouTuber, podcaster, video creator with tons of info and ideas to pass along to anyone looking to control their finances and build wealth. Are you ready to join in on the party and be a part of some fantastic companies that are already out there? Let's find the next Apples, let's find the next Googles, and let's find the next Amazons. They're out there. Throughout this series of $0 to infinity, I thought that was a cool tagline, hence you see me wearing those sunglasses on my YouTube logo with $0 on the left lens and the emblem for infinity on the right. I thought it was a cool idea, but back to what I was saying. I use a lot of investing strategies that analysts on Wall Street may overlook. Last episode, episode 4, I went over one technique called social media awareness. I look for what products or services are trending on social media. For example, here on YouTube, you may have been bombarded with drop shipping ads, Amazon FBA ads, or even merch line shoutouts from your favorite YouTubers. I remember I fell in that rabbit hole as well. Well, guess what? There are companies called Shopify and Amazon that you could have invested in over the past couple of years, and you'd be making bank if you built a position when you first stumbled upon the opportunity. Yeah, I said making bank. I'm a millennial, remember? Or maybe you have seen the Tesla craze going on in the past year here on YouTube. Don't get me wrong, I'm a big fan of the brand. Believer of electric vehicles taking over the world? Maybe. Definitely not now. Do I think people are buying future value at today's price? Yes. Will there be better entry points at a later time? Time will tell. I digress. Back to what I was saying. That's right. Mission from zero to infinity. I know the grind may seem hard and very difficult, but trust me, it's well worth it in the long run. You'll notice my public stock portfolio is currently a little over $400. I've deposited $100 in each episode so far, and the plan is to continue to deposit $100 per episode as we build this channel. I personally don't think it would have been fun just to start with $50K right off the bat, since there are a lot of beginners looking to get started in the stock market with very little money. Remember my story from the beginning? I started with $0 back in the day, just like you may have. I have $200 ready to go in cash plus 8 shares of Fiverr, which is an up-and-coming growth company in my opinion. I covered a brief description of Fiverr in episode 4, so if you missed that, go check it out. I'll be keeping track of my portfolio's progress in each thumbnail of each video I post. My goal is to show you that the power of staying committed and building slowly and steadily definitely wins the race in the end. I'm sure if you stumbled upon this video, by the way, congrats, you found the best finance channel out there. I suggest watching all my videos back to back to back, starting episode 1, starting with $0, then coming back to this video and continue to follow along my journey in future episodes. You'll probably find yourself saying, wow, referring to me, Michael, he started at such a small portfolio and now he's at 6 figures or maybe 7 figures. Time will tell. How do you do that? What did he do? Well, I'm on a mission to 0 to infinity, right? Haven't you been listening? Make sure to like and subscribe if you want to be a part of the journey. I'm always interested in hearing other people's investing perspectives. Maybe you see something trending on social media or in the influencer space that I may be missing. Feel free to full send a comment and let's discuss. Maybe we could build a community of like-minded investors. That sure would be cool, wouldn't it? Now, let's discuss the elephant in the room. Do you like my lingo? I use a lot of different expressions in my speech. I watch a lot of YouTube videos, maybe like you, especially in personal finance, investing, and that niche. By the way, I usually find myself listening to videos like a podcast rather than watching them here on YouTube. Is that just me? But anyway, between you and me, my goal is to be more of a podcast voiceover channel rather than have things move around on the screen or just have me sit in front of a camera and discuss the topic for the day. You tell me, if better quality video edits are preferred, I sure could use a video editor out there for cheap. Remember, this is a personal finance channel after all. I would need someone out there that could help add in sound bites, add screenshots of what I'm talking about, maybe some Teslas rolling in the background. That seems to be trending here on YouTube. Email me, michaeldorisobusiness@gmail.com. Once again, michaeldorisobusiness@gmail.com. If you know someone or have any leads, let me know. But anyway, back to the elephant in the room. I've noticed dividend portfolios and dividend income videos have been trending on YouTube lately. It seems there are true dividend stock diehards out there and they're forming in a big community. So sit back, relax, and let's listen in to my thoughts and opinions of why investing in only dividend stocks isn't necessarily the best way to build wealth. Hear me out, all you dividend loyalists. Keep in mind, everyone has their own opinion and investment goals, but I personally think it's crazy to just invest in strictly dividend stocks, especially if you're young or a millennial like me and also just getting started with little money. I do own dividend stocks myself, but I prefer not to invest like an old geezer. And there's a start. Point number 1, investing like an old geezer. For all those old geezers out there, sorry, I had to say it. This channel is meant for the younger crowd anyway. I just looked up the definition of old geezer on the interwebs. And an old geezer is somewhat insulting term for an older person, especially one who is no longer cool, hip, or with the times. Look at the bright side. If you're still cool and hip, then you're just old. Anyway, back to dividend investing. I get it. Nothing beats that feeling when you see a dividend payment hit your account. 20 payments in the same month. Awesome. 10 payments just came in this week. Sweet. 3 payments just today. Where do I sign up? Do you need extra income? How much do you want? $100 a month? $200 a month? Or how about $500 a month? That sounds awesome. Well, guess what? Let's say for this example, your overall dividend yield is 4%, which I think is on the higher side of things, but I digress. How much do I need in principal to bring in $100 a month at a 4% yield? Well, let's do some simple math. $100 a month is $1,200 a year, right? So $1,200 divided by that 4% yield is $30,000. Really? $30K? But I don't have that. Now, how about $200 a month I mentioned? Just double it, $60K. but I want $500 a month. That's a bankroll of $150K. $150K? I know what you're thinking. For someone getting started, that's over six figures. How do I get $150,000? The answer is time, which you have now, but you don't have that money part. Quite a conundrum. You might be asking yourself, but if I don't invest in dividend stocks, then does that mean I should invest in growth stocks? Those are risky. But guess what? I believe that you have the potential for higher profits, and luckily for you, if you're young, key note, if you're young, you have more time to make up for any losses. But you're old, sorry buddy, time isn't on your side. You'll probably want more value stocks, and dividend stocks may be the better strategy to build your account, especially if you're planning on living off your portfolio. Now, I don't know about you, but since I started investing back in 2010 at 19 years old, my mindset was to build my portfolio sooner rather than later. I knew that strictly investing in only dividend stocks and not adding some growth stocks would take me forever, especially since I wasn't making much money during my college years to pile into the stock market. In today's market, let me repeat that. In today's market, I believe there's more money to be made in growth names compared to dividend names. Let's find those multi-baggers. Peter Lynch, where are you at? I'm sure dividend stocks will provide over 100% returns, but you may have to wait a long time. So are you willing to wait? Fine. You win. Just keep in mind, companies with a 4% dividend yield or higher pay out their extra cash from profits to investors rather than keeping the money and putting it towards growth opportunities to bring in more top-line revenue. Where else do you think those dividends are going? Point number 2, stagnant appreciation. You're leaving money on the table and missing out on upside in your portfolio. If a company doesn't keep innovating or buy major disruptors, there's a possibility the company will get disrupted itself and lose value over time, or worst case, go bankrupt. Hey, what's going on, Blockbuster? What's going on, Toys R Us? Now to my third point, number 3. Contributions are a big percentage of a beginner's portfolio when first getting started. For example, look at my portfolio of $400. It's a very exciting time to start your investing journey. Do I want to invest for a measly $1.33 in dividends each month? $1.33. $400 times 4%, $16, right? Then you have to divide by 12 months, $1.33 a month. Or do I want to have a shot at a larger percentage gain in capital appreciation? 400 going to 450, 12.5% gain. I like that option better. Plus, next video, I'll be adding another $100. As I mentioned, the goal initially is $100 per episode. Just keep in mind, this may adjust with time. Now on to number 4. I'm a believer of investing in what you know. If you have 50 plus companies, how are you going to follow up with the story as the months go by? Count me out. I'm out. Last, number 5, you're limiting yourself from having the opportunity to invest in many great companies out there that don't currently pay out a dividend. For all you investors with large bankrolls, fine. You win. Have fun. Dividend invest. For all you investors with looking for income, you win again. Go and have fun with your dividends, all right? For all you investors that think that we're heading in a recession, sure. Have fun investing in only dividend stocks. Just make sure to mail me your crystal ball so I could take a look as well. Thanks for tuning in on this video. Please comment and like, and I will definitely see you in the next one. Looking forward to it. See you guys.